afternoon to all you wonderful traders out there, all you wonderful, beautiful ladies and you handsome gentlemen. Welcome to our daily live stream brought to you by DCFX Asia, and I'm yours truly, Abe Layman, coming to you live from Central Java, Indonesia. All right, how you guys are doing? Good. I'm doing pretty happy, pretty good. So for today, there is no particular issue, but rather let's take a look at the events that has happened during the week and see if we can gauge what's gonna happen next week. Okay, so as usual, what we need to do in any trading day before first thing is we take a look at the economic calendar. All right. So today is Friday, the 9th of June. And what had happened in the morning was the Japanese yen, M2 or money stock based on year remains the same. Chinese yuan, CPI, about there 0.2% as expected, but the PPI has got a negative value of minus 4.6%, which is lower than the expected value of 4.3%. Okay, so next is about an hour ago, the Italian industrial production month on month, the expected number was 0.2. The actual number is minus 1.9%, which will weaken a bit, maybe, but it's not a big deal, right? So, and later tonight, when New York opens, the loonie or the Canadian dollar has got the employment change and the unemployment rate and also the capacity utilization rate. Well, Canadian dollar is not a major currency. So for those of you who's trading the loonie, yes, you might take note. But the rest of us, I think, what's happening to the Canadian dollar will not affect much to the rest of the market, right? But what we are interested always is the base currency for the global trade of the world, which is, like it or not, the still it's the US dollar. And what has dollar been doing this week? As we know, yesterday, last night, during the New York opening, the Bureau of Labor Statistics issues the unemployment claims, which is a weekly thing, and it happens every Thursday. The expected number of the unemployment claims stood at 236K. The actual number that came out yesterday was 261K. That's about 20 plus K extra, right? And that sent the dollar index spiraling down almost immediately until the rest of the day. By the closing of New York, the dollar index was on the south end of things, on the south side or the bottom of it, right? And before the prior to yesterday, there were no details, except on Monday there was the ISM and factory orders of the US, which registers negative numbers. So we did mention, or we did have an issue on the US economy yesterday. We did discuss about it, and it looks like the bulls, the American bulls, are not in the market at the moment, right? So we've seen the data or the economic calendar. Looks like it's gonna be a technical trading day for today. So let's take a look at the technical details. Let's take a look at the dollar index. Okay, here we are. This is the dollar index daily chart, which means one candle represents the movement of one day. And for today, the index opened at 103. It has a low of 103.252. The high today is at 103.557, and currently it's running at 103.511. Okay. Now, if we'll take a look at the previous day's candle, which is yesterday, this is a very tall Morobozu. Morobozu, or some people call it the tower, it is a bearish tower, and the position is it covers both mid bands of the 15 BB and the 20 BB. Okay, for those of you who understand, Morobuzu is a continuation pattern. It's not a reversal pattern. So if it appears in the middle, in the mid band, whether it's 15 BB or 20 BB, it means that it's going to continue the previous trend. And if you look to the left, the previous trend was slightly bearish. And looking at this Morobuzu yesterday, that appears, I suspect that the dollar index will continue to go south. So the dollar looks weakening, and it may want to go as low as 102.863, or worst case scenario will be at 102.330. Okay, so the American bulls have given way to the American bears. Well, will the bears come and dance their way around? We'll have to wait maybe till next week. But for today, there is a high possibility that the dollar index may go lower to the first target at 102.863. And to confirm our analysis that the dollar index is bearish, you see this is the MA10. Okay, M8, I use MA10 as the momentum line. Once it crosses the mid band of 15 BB, that's the first indication that the bearish momentum is here. When it crosses the 20 BB, then that is the second confirmation to support the notion that the bears are in the market and they will dance their way down until they reach the southern target. Okay, that is based on the daily chart. Let's take a look at the H4 chart. Okay, now H4 is telling us that intra-week movement is slightly different. Okay, uh, some will call this a revenge trading or apology trade, meaning Thursday it dive, Friday it may want to recover. And looking at the candle, this is the gravestone doji, and happening, it appears below the 20 BB lower band. It is a bullish reversal and followed by a hammer, but the wick or the tail is not that long. Okay, so it may want to prove to be a bullish reversal, and what's happening is it has tested above the MA 125. Next, it will go and see and say hello to MA 100. Then it will go and meet the MA 75 plus the 15 BB midband, then the 20 BB midband. Okay, this candle currently is running until the next 15 minutes, because based on my timing, H4 candle changes every 1 o'clock, 5 o'clock, and 9 o'clock. Okay, so now the next change for this particular candle, for this current candle, is going to be at 5 p.m. my time. which is about 15 minutes from now. And looking at its movement for the last 3 hours, it has a very small range, meaning it's not decided where it's going, right? The major trend of H4 is still bearish. The counter trend is bullish. Will the bears give way to the bull, or will the bull will decide to take an early weekend? Let's take a look at H1 then. Excuse me. Okay. Now, H1 has got a clearer picture. Why do I say it's a clearer picture? It's because, number one, the trend ribbon yesterday, after the opening of New York, decides to split open. So you can see that the 75 is leaving the 100 and the 100 is leaving the 125. So we have a very nice, albeit a gradual decline. And why it became a gradual decline? Because the opening of the day this morning during the Pacific hours, there was a dragonfly, but it's still within, it's still above the bottom band. So it is not that strong based on H1. But you saw H4, they have a gravestone doji below the bottom band. That can be tricky. But as it is at the moment, we know that prices move from bottom band to mid band, then to top band before it wants to turn. Now, based on the 20 Bollinger Band, prices are already above the top band. So there is a good potential that it may not want to go further. It might want to turn back. Maybe they'll wait for the Yankees to come to the market, then they decide. But let's look at the current situation, the counter trend, it is going up. Then we have a resistance at 103630. Another tough resistance will be at 103725. And I suspect that this can happen in about 2 hours, where the MA75 will be resting here, and here, as you can see, there is a channel cross. The daily channel crossing the weekly Fibo, monthly Fibo, and the daily Fibo. So when we have the MA75 reaching at this point, and it will become a very tough resistance. Why? Because multiple indicators congregate at the same spot will become a tough resistance or support. In this case, it is resistance because the price is going up. Okay, so based on H1, uh, the counter trend is not that strong, whereas the major trend based on H1 is still bearish. Okay, so let's see if we can see other details based on M15. M15 is telling us that the bulls have run out of steam. See, MA125 got tested twice already, so it will need a third attempt to deny the advancement of the bulls. Only then the bulls will just say, okay, time to take a break. Let the bears take over. Okay, so, and it is going sideways apparently. Based on the, let's compress this. See the trend, you can see that the trend ribbon is going south all the way from yesterday and until today. Now prices are testing the MA125 and being supported by the MA100. So it is a very tight band. It might want to go sideways, and it'll probably wait for the New York opening to find out what's happening. And by the way, New York opening, U.S. government is still having the issue of the debt ceiling being approved by Congress, by the Federal Reserve. Although last week, President Joe Biden has signed for a budget of 31.4 trillion. They have the ceiling being moved a bit so that the company or the country, the the administration can run its business, because without that, uh, the servants, the civil servants, the officers, the staff of the administration and its other services may not get paid. And it has happened once before. Will history repeat itself? I think no. They wouldn't. It is a very embarrassing thing for the world to know that the biggest economy in the world has no money to run its government. It is an embarrassing thing, and I'm sure the Biden administration wouldn't want that to happen. So let them do all the lobbying, let them do all the negotiation, but let's hope not. And let me just share with you what I discovered on the internet. Oh, right. And this is coming out from the White House itself. The estimated economic effects of of debt ceiling standoff for Q3 2023. It can be scary. The measure jobs based on millions. Brinkmanship is currently running at minus zero point 0.2. They are losing about 200,000 jobs. A short default will bring that number up to minus zero point 0.5. A protracted default may bring that number to minus 8.3. Then that will definitely bring the unemployment rate to be higher than what it is. The real GDP percentage annualized growth at the moment is standing at minus 0.3%. With a short default, it's going to go to at minus zero point 0.6. A protracted default will look at minus 6.1. Unemployment percentage points currently at zero point 0.1, short default at zero point 0.3. Then the protected default will be at 5.0 percentage points. That's very scary. 5% unemployment rate. That is something that they don't want to see. All right. So let's take a look at another sad news. And this is by Reuters. Debt ceiling talks spare urging benefit programs. See, benefit programs. And actually, I'm quite happy when I see this chart. Why? See, at the bottom, the defense spending is beginning going down, which I think is good. You see, when the defense spending, that means the military might of the American military will be reduced. So where they don't have money to spend on raising on buying arms or buying ammunition, that will mean that they will not want to go into war. So if the US is not going to any new wars, the world will be a peaceful place, isn't it? Hallelujah. Yeah, that's what we want. We don't hope for that. We want that. We want peace. Come on, man. Listen to John Lennon. Please give peace a chance. In whatever that happens, please give peace a chance. Look, the world is big enough for everyone. All right, let's share a bit, love a bit. Just spread the love, spread. Uh, well, this is good news for me actually, because I'm a man of peace. I don't like to go to war. I don't like wars. I love peace. And when we have peace, only then economy can grow. Economic growth will come from peaceful times. War times, how to run the economy when you are in a war, right? You'll be busy fighting your enemies. So tell your enemy, okay, stop. Let's have a meal. Let's talk over meal and discuss. See where we can come to terms, where everybody can be happy. Then that's the end. No more war. Okay, so that is the good news, I think, because the defense budget will be reduced, the military spending will be reduced, domestic spending also reduced. In other words, the social benefits might be reduced, especially for the healthcare services, which is not bad. Is it good or bad? Well, after all, they have health insurance. I don't think that is a bad thing. All right. So, well, that is good news. So, but the good news for us may not be good news for the dollar index because let's take a look again at the dollar index. Right. See, while I was speaking, the dollar index heard that got bad news and it begins to slide down lower. And if you count the number of spikes that happen, 1, 2, 3, 4, 5, 6, maybe seventh wave, the next 15 minutes may show us that the bears are in the market. All right. So, and it will be tough for the dollar index to go further up because the top band is going to meet the MA 125. Once they are together, they form a tough resistance, which will tell the dollar index bulls to go away, go home. Time for the bears to come and play. Okay, so excuse me. In a nutshell, the dollar index is weakening, and the other indicators, the fundamental numbers are pointing in that direction, the weakening of the dollar index. And technically, we've just completed our analysis of where the dollar index is going, which is to the south side. South means down, north means up. Okay, so when the dollar is weak, our favorite asset class, gold, will go where? We'll find out later. Okay, so to run out this week based on the dollar index, as you can see, let's open this daily chart again. It is a roller coaster ride. Today is Friday. Monday it went up, tried to go higher, but last month's high of 104.709 will stay there. It won't. I doubt it will be tested again anytime soon. Soon as in the next week or so. Okay, and fundamentally, the underlying fact that is becoming the haunting episode in the U.S. economy is that the debt ceiling of the federal budget is still in akimbo, meaning it's still pending. There's no real uh, 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 answer to that from the Federal Reserve. But, well, you'll never know. They might come up with some ideas during the FOMC meetings next week or week after next. I'm not remember if I'm not wrong. So we just wait and see if they can do something else. So in the meantime, for gold traders, I think you like the news. Okay, so right, let's get out of the dollar index and see if we have any audience. Oh, we do. Jenny, hello. Hello, Jenny. Welcome back, Jenny. And Adrian Stiglitz, say hello, Mr. Abe. Hello, Adrian. Mr. Stiglitz, how you doing? Welcome back. So, you guys got any requests? Let me know. In the meantime, usually after we discuss the next thing we do is we take a look at the prima donna of asset classes, which is gold. Hang on, let me just take a look. Okay, so this is gold. So this is my main profile. My bad. So sorry. Now let's take a look. A go. Ah, I'm making profit. Not bad. So gold is the opposite of the dollar index. And see the trend ribbon. Why I use trend ribbon? Because it serves the purpose. Now, one, it tells us where the trend is heading. Number two, it can be a base of support or resistance. And there are three ribbons. So it will also tell us that is it going to really slow down? Is it going to be a reversal? Or the last trend ribbon, which is the M8 125, is it going to give up? So at the moment, what we are seeing is gold have tested the M800 only once. That was last month and last week. For this week, MA100 was not tested. Almost, okay, almost touched, but not tested. And the low is higher than the month low. This is the month low. Let me take a look. This is happening on, this is 5th of June, right? And the low is 1938 even. MA100 was there waiting at 1935. Not tested. 1935 AD, okay lah. 1935, 1936, not tested. $2 difference, not tested. So it means that the reserve strength of gold is still there. The bears they not go below because the bull say you come here, I gonna punch you with my head. So the bears say okay, 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 okay. They stopped, they left. Now the bulls are in motion, the bulls are in the game. Maybe what we have now is the Papa Bull is taking a break because only from yesterday's Morobozu and today it is quite shy to go up. Quite shy. Will it go up? Let's take a look. From the daily chart, let's take a look at the H4 chart. Okay, let's expand this. Now, am I blocking you? Oh, hang on. I'm not blocking you. Okay, I'm safe. Let me take, yeah, right. So, what's happening is this weekly channel has managed to maintain a support position. And remember the bogeyman 1962-80? It is negotiating with the bulls. Will the bogeyman give way to the bulls? We will find out in a matter of minutes, if not hours. Because at the moment, looking at H4, what we are looking at is this is the pole and this is the flag. So if this bullish flag gonna play out, let's measure the pole height. Pole height at $27. Oh, much higher. Huh? So if this bullish flag plays out, it's gonna be a $27 climb. $27 climb. Yeah, the target will be at 1995.50. Can be done, possible. Let's look at the range for today. So from the H4 chart as we speak, the bogeyman decided to let the bulls go. So now the junior bulls call Mama Bull to join them. to break this weekly feeble. Okay, let's take a look at H1. Where are you? Let's expand this. All right. You see, the bogeyman has got an ally, which is the yearly channel, waiting to be tested. And that yearly channel is my current TP. I have a buy here at the bottom. We'll go into that later. So at the moment now, H1 says that, yeah, the bulls may be leaving the bogeyman. Now it's 4:31. I want to see at M30 to see, okay, this is what I want to see actually. Let me explain to you. See, M30, one candle is 30 minutes, and every 30 minutes it changes. So it's 1 minute past the 30-minute mark, and it opens above the bogeyman. Remember, the bogeyman is 1962.8, right? Now, if the candle opens above that level and it goes up, most likely that it will extend further up. If it comes back, that means that candle is not working according to plan. At the moment, it is according to plan. But after testing high, it got resisted by a combination of the mid band 15 and 20 BB. So mid band 15 20 BB plus the weekly Fibo at 1963.72 all congregated into one. Yes, it can be tough, but we'll wait and see. Now, based on M30, I'm quite comfortable. From M30, let's take a look at M15. So someone did ask me what's the difference between chart setup and trade setup. Okay, chart setup is something that you do on a daily basis. You update your charts every day before you trade. So you set your charts so that when the trade setup presents itself, you can see it very clearly. What is meant by trade setup is the formation of the charts of the candles in respect to the indicators like this. Here, the MA 125, MA 100 got tested once with a bearish candle, then got tested twice. But the trick here, why I buy at this level, it's because this bullish candle the opening price is above the MA 100, okay, and it closed higher to become a bullish candle. That is why I decided that I want to go long or buy, because the other time frame is showing about the same thing. There is a potential of a bullish reversal. So currently it tried to go up, but the mid band of 20 and 15 BB has become a resistance. Okay, so in about 11 minutes at 4:45 or 5:45, when this candle's closing price is above the bogeyman of 1962.80, then I'm pretty safe. My position will be pretty safe that the bulls will want to come and play, and maybe we can take some small profits earlier before the Yankees come into the market, or maybe we can just leave it and wait, let the profits run. Sometimes, there is an old adage when it comes to trading. When I first started out, the senior traders tell me, cut your losses short, let your profits run. Uh, to me, it's very vague. How short is my losses and how long is my profitable run? It's pretty tricky. That is why I learn, I dig, and get to know more about technical indicators. Technical analysis, there are 1001 tools that you can use. I've tried most, all right? The modern times, you have algos to help you out. Uh, I'm a dinosaur. I'm pretty comfortable with old school technical indicators, which has served me well all these years. I stick to that. Algos, I don't deny, some are good. I don't deny that. Those are good, but I I'm not a fan of algos. Expert advisors, yes, it may work, but at the end of the day, it's the human factor. The human mind is the greatest tool of all, and the owner of the human mind need to have a trader's mindset, the psychology part of it, right? Once you acquire and master that skills, it will be yours for you to use for the rest of your life. Trading will never die. Trust me, it will never die. I've done this for 35 years and I'm going to do it until the day I die. Because nothing else can give you that kind of opportunity every day. Yeah. Market opens every day. Okay, Saturday is weekend close lah. But unless you trade Bitcoin, you trade cryptos, they are open on Saturdays and Sundays. But the range are small because the volume is small. I would rather take a break. I try not to look at markets on weekends. It's my me time and my family time. All right, but Monday to Friday, there's so many opportunities every day. Well, okay, enough of me telling you about my life story. But as we're saying, so it is a current tricky moment. So we gotta wait 8 more minutes. Just for curiosity's sake, let's take a look at M5. M5 looks pretty comfortable. The current candle opens on the bogeyman. Now it's trading below the bogeyman. Why it turned back? Because it met with the top band plus the trend ribbon all congested there. Now they are trying to go for another attempt. Now let's take a look at. Before that, let me show you a trade setup based on M5. See, this is the dragonfly, and I think this was the reason why I entered my buy position here. I saw the dragonfly below the bottom band, and then there was another two dragonfly. So psychologically, prices test up, test down, test up, test down. So at every 5 minutes, the prices remain the same. See, the open and close is all within the same price of 1961. And the number three has got its psychological role in the market. So after three candles, opening and closing at around 1961, the fourth candle say, I think the bears have given hope. Now the bulls take over. So baby bull and brother bull enter the market. Of course, with the spread, I got a slightly higher price. No problem, no big issue. Then we see a weekly channel and a daily channel cross. That is a good support. Then it rides the daily channel way past the mid band 15 BB, way past the mid band 20 BB, and look at MA10. This is the trend. This is the momentum line. When the momentum line cuts from below, it cuts the 15 BB. First confirmation that the momentum is bullish. First indication that the momentum is bullish. The confirmation comes when the momentum line cuts the 15 BB mid-band. Here, that's the confirmation. And it works out accordingly. That's how I read markets, and I hope you can also read the way I do. If you have better ideas, please let me know. If you want me to reduce the number of lines, sorry, I will be a blind deer because I have no idea. I cannot see without the lines, without the indicators. I'm useless. I cannot tell you where the market is going. Relying on candles alone, yes, I can tell when it's gonna turn, but how far it's gonna go, I'm blind. Okay. Uh, so let the bulls negotiate with the trend ribbon while we answer. Well, we take a look at our guest in the house. Next is Smith JT. Take your buyout 1966. 1966. Oh yeah, 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 yeah. I have my TP at 66.54. We'll wait and see. We'll just monitor the goals movement. I think we are pretty comfortable at the moment. Okay. Thanks for the advice, Smith, and welcome back. Good to have you. Next, who do we have? Lisaya. Hey, Lisaya. Welcome back. How you doing? Good? Good? I hope good. Go Walker to be safe. Yeah, good idea. Always have to be safe. New. Hello all. Hello new. Welcome back. You trading? I hope you do. Go Walker. Perfect analysis. You should wait for clear zone. Oh, thank you, Mr. Go Walker. I won't say perfect, but at least it is. As long as it's useful for you guys, I'm happy. Doesn't have to be perfect, but as long as what I the way I read the markets, I give my analysis, it becomes crystal clear. Then I've done my job. I'm very happy. Thank you for the compliment, sir. Adrian, stick. Adrian. Okay. U.S. oil. Adrian and Smith wants Ethereum. Okay, one moment. Let's take a look at the oil. What's happening to oil? Let's start with WTI, West Texas Intermediate. Well, it is going sideways. For the month of May, it is going sideways with a slight tendency to be increasing. The trend is pretty flat. All right. Uh, the bogeyman for WTI is at 75.58. And currently it is being supported by the low of last year, which is at 70.251. Okay, so you have a support at 70.251. You have a tough resistance uh, waiting to be tested at 74.397. It is sideways. Well, OPEC Plus has got no other ideas on how to uh, make their products goes more saleable, because when the demand for oil is not there, they cannot force people to buy oil, right? So, and alternative energy has been in the energy market. Countries within the belt, the equatorial belt, have a lot of sunlight. They use the sun. Countries with large seashore will harness the wind energy. In countries, economies with hilly terrain, high ground, they use hydropower, creating dams and all that. Well, uh, the demand from China for oil is not increasing, is because the manufacturing export orders for China has not increased, because the US and the European Union, uh, the economy is not growing that much. So the need for new products, the orders for new products are not that much. So that is why China does not increase its demand for oil. So the global demand for oil is not there yet. So it is happening now. What's happening now is the demand for oil is remaining at status quo. Okay, so it's going to be a sideways thing until maybe say by September. After autumn comes winter, and then they might need more. Okay, so that's the WTI for you. Next, let's take a look at Brent. It's the same story. So, in general, the consensus for oil at the moment is sideways, and it can be a good thing when it goes sideways because you know the resistance level. As if for Brent, it's standing at 78.685. The support currently is at 75.40. Worst case scenario support will be around 73.77 or 74 even. That will be the lowest, at least coming for this month. Maybe by next week it will still about there. Because why? This line, this yearly FIBO 75.364, that is last year's low. When prices hit the previous low, traders do not want to trade below that unless speculators push for prices to come down. See, there are there's always three group of people in the market. You have the buyers, you have the sellers, and you have clowns like me, speculators. Okay, so speculators is are actually the greatest judge in the market because the speculators will decide where the price will go. Buyers want to buy at the lowest price. Sellers want to sell at the highest price. So price discovery is usually dictated by the speculators. And speculators are usually financial institutions, hedge funds, uh, clowns like me, who trade small volume. We are part of the market. So yeah, my one rod does not shake the market. No, only the institution can shake the market. Okay, so I hope I answer your question. Wait, hang on, Smith, right? Oh, Adrian. Okay, Adrian. I hope I answered your question and I answered your request. So oil is crabbish. The bulls and the bears in the oil industry is not there. It's the crabs having fun. It's the crabbish month, I think, until something pops up or geopolitical tensions has increased or all of a sudden there is a large demand for products that require China to have large demand for oil, then price may look on the high side. At the moment, it's sideways, it's ranging market. Okay, Adrian? Next, is it Smith? Smith wants to see Ethereum. Okay, my friend. Let's take a look at Ethereum. Wait. Where's my Ethereum? Oh, yeah. Okay. Now, Ethereum is being traded against the dollar. So, if the dollar falls, will Ethereum go up? Highly likely. Highly likely. Why? Okay, let's dissect the daily chart. Okay. See, rebounds usually occur at MA100, right? Last week, last month, it rebounded twice and both at the MA100. Once, which is on the 12th of May. Second one happens on the 25th of May. And for month of June, it rebounded once on the 5th of June, then following day on the 6th of June, and currently it has rebounded only at MA75. And that rebound is usually because the dollar index seems to be weakening. So when the dollar index weaken, Ethereum might want to go up. But there is a but. Even though the trend ribbon is going gradual climb, it's going crabbish first. Wait maybe until the Yankees come into the market at in about 2 hours time. Then we might see it goes up. It goes up. But at the moment, it is sideways. Let's take a look at smaller time frame, H4. Ah, H4 doesn't look so promising. Why? Because it is at the mid band. It is below the mid band, and we are waiting for the momentum line to cross the mid bands again, because the last crossing is a bearish momentum. The bullish momentum is not here yet. Based on H4, let's take a look at H1. Okay, can I draw your attention, all you beautiful ladies and handsome gentlemen? This can constitute a double bottom. Wait, am I plugging you? No, I'm not. Okay. These two bottoms can constitute as a double bottom. Now, based on H1, the momentum line is about to cross the mid bands, and it tested up to 1845, then got resisted. It's now trading above the mid band of 15 BB, slightly declining. When I see a double bottom like this, yeah, it is a possibility that it will climb. And looking at the height, it's 1441, 1441. Okay, the next target will be around here at 1855, but it has to cross the trend ribbon, so it may be tough. And here we have the monthly Fibo and the daily Fibo got tested once already on this uptrend. It will try again. So let's see a smaller time frame, M30. M30 looks a little promising. Why? It tested way beyond 125. I mean 125, right? So it tested beyond. It might want to go sideways because the bullish momentum has been confirmed when this momentum line crosses the midband 15 BB here, then it crosses the midband of 20 BB here. So the bullish momentum is in the market. Now, whether the bulls are strong enough, maybe here junior bulls are trying to push through, maybe waiting for mama bull to come a bit and come and help, or maybe wait for papa bull to really push through. Okay, so looking at M30, slight inclination. The trend ribbon is flat, so it's about to change. It's about to flip. Let's take a look at 15, M15. See if we can see some. Okay, nice. This is what I like to see. So M15 is telling us that the bulls are here. But, junior being junior, do a bit of work, then get tired easily. So junior say, hey, after passing the 125, the junior say, okay, wait, hang on. Take a break. Take five. So let it go. It will be going sideways for sure. At least for about 3-4 candles. 3-4 candles, it means about 45 minutes to about an hour and a half. It is going sideways. This is at 14:45 plus 4:18, 6:45. So by 2 hours time, for Ethereum to be good on its bull run, it has to cross this level at 1845.70. Well, Ethereum is bullish. Uh, it is waiting for time, probably when the Yankees are in the market. Okay, Smith JT, I'm bullish on Ethereum. So if you want to buy, I think it's a bit too late. Better wait until it pulls back. The support for Ethereum is at 1835. Let's compress this to see how far it will go. Well, yesterday's high will be a nice target for today, which is at 1859. We have the Ethereum support is at 1835 there. So you have your support, you have resistance. Then after that is your trading plan, my friend. Plan your trade, then you trade your plan. Okay, Smith, thank you for asking. Thank you for the request. Let's see who's next. We got 4 minutes, 4 more minutes to go. Aurel Pan. Hey Aurel, how you doing? Welcome back. I'm looking at 1 hour chart. Good for you. A Scottish friend, Scottish trader friend, a good friend of mine. He tells me that the 1 hour chart is like God. Why? Well, most markets, or usually offices, open on the clock, meaning it's at, let's say, 8 o'clock, 9 o'clock. Lunchtime starts at 12 o'clock till about 1 o'clock or 2 o'clock. Closes at 4 o'clock or 5 o'clock. So the 1 hour chart on the hour is when markets open and close. So that is why movements of charts at the 1 hour mark has got a lot of movements. That is the reason why. And good idea, Aurel. I agree with you. It is a good time frame, but uh, for me, I don't rely. If I rely on 1 hour chart, my stop loss can be very huge. You know, I'm very stingy when it comes to stop loss. I okay lah. Anyway, thanks for the comment. All right, Lisaya, seller push down market. Yes, seller push down market, buyer push up market. So between the buyer and seller, there's a third party called the speculator. Okay, and go Walker, but I profit in buy. Good for you. I think I'm also experiencing a profit. I hope. Let's take a look what gold is doing. Oh, it came down, but it's okay. Look at M1. See, this is my buying price. It's trying to test again, but it's not a big deal. But just let me enlarge this. Okay, why I use multiple time frame to have a clearer picture, right? And because I don't have a strong heart, I don't like to have a heart attack. I don't like surprises when it comes to trading. So looking at this is a double bottom from this trend down, and this double bottom is telling me that the golden bears are not here. It's just that the junior bulls got slipped. He fell. Now Mama Bull is back. So the height of this double bottom is at 106 points. So 106 points. In the next 15 minutes, I can see prices going to about 1964 based on my analysis. I'm not see whether uh, that's what I think the price will go. I'm not a god to tell the price will go, but I'm expecting it to go to that height at the moment. So let the bulls or let the market do its work, or is there something else? Well, we'll see. After all, it can always test against my price again. We'll just monitor its movement. Okay, so pretty safe. I think my position, how much money I'm making, about $16. Too small lah. So what goal is trying to do is take a look at this is M15 actually, and this will stay as S1. Okay, looking at M5, gold may want to test the bottom band before it rise again. It's pretty normal for markets to behave like that. Okay, so now it's floating loss. Never mind, small matter. All right. Okay, ladies and gentlemen, that is all I have. Oh, Lisaya, you have a sell at 1969, your target profit at 1930. Well, 1930 is a bit too far. All right. 1969, that's a good price to sell. You are getting profits already, actually, Risaya. which is good. And well, it's your trade, then your plan, you decide. But it's good to have to cut position, then wait for the market to show its reaction, then come again. Okay. So, well, ladies and gentlemen, we have come to the end of today's program, and it's the weekend. I hope you guys have a wonderful weekend. Have fun over the weekend. Okay. And I'll see you again on Monday next week. Okay. So before I go, whatever happens, don't worry. Be happy. Stay healthy and please trade wisely. Have a great weekend, everyone. Gotta go. God bless. Bye bye.